Here's a quick hack on how to analyze any commercial real estate deal in 2026. Take a listen.
Tracking the movement of the multifamily middle market in the United States. And what's happening right now, you've got interest rates that are relatively high. They have not really come down much. They bounce up and down, but they're still pretty high, which sucks because that's a lot of money going out the door to the bank. So cash flow is low. Meanwhile, at the same time, what we're seeing is that the cap rates on properties are actually going down, which means properties are getting more expensive. At least in this past quarter, Q1 of 2025. And so what that creates is a situation where very few deals pencil. The spread between your cap rate, which is like your going in yield, and how much is leaving to go to the bank in the form of interest rate is very small. And most of the time it's negative, which means more money is going to the bank than is coming in the door, which is not a good situation. Investors don't like that. That's risky. And so very few deals are penciled. What we're seeing as competitive is if you can acquire your deal at a cap rate that is at least 1% higher than the interest rate you're getting on your senior loan. You can accomplish that with an assumable loan or just by getting a higher cap rate on the deal by negotiating well. Those deals are going to be more competitive because you're going into it with a lot more cash flow. It's a lot more stable. And then once you've accomplished your business plan, your stabilized yield, so your net operating income divided by the total cost or how much money you spent on the deal should be at least 7% by year 3. And that would make you competitive. If it's a value add deal where you're putting in a lot of work and you're taking risk by spending a bunch of money to try to accomplish a business plan, that stabilized yield on your total cost should be at least 8%. And that will put you in the competitive tier. Beyond those metrics, having newer properties, having at least 5 full cycle exits or partnering with someone who's got 5 full cycle exits will put you in the top 1% of the deals. Once you get there, it's just a matter of buy box preference for the investors.